episode 1, welcome back. And for those joining us for the very first time, a very warm welcome. As many of you know, this year's webinar series sits under GCFC mandate from the Ministry of Foreign Affairs to support the finance track ahead of the United Nations Water Conference 2026. Through this initiative, our objective is to bring together financial institutions, policymakers, international organizations, and the private sector around the practical discussion on how to accelerate financing for the water transition. Following episode 1, which focused on innovation and technology deployment, today we move further into the financing dimension, specifically looking at how capital can be mobilized at scale for water infrastructure and water resilience. Reason why today's discussion will explore how these instruments are structured, how water is positioned within sustainable finance frameworks, and what is still needed to accelerate the deployment and scale investment opportunities. We are very pleased to be joined today by senior representatives from HSBC, First Abu Dhabi Bank, and BNP Paribas, bringing perspective across sustainable finance and capital mobilization. Before we begin, I would like to thank our speakers for joining us today and contributing to this discussion. And with that, I will hand over to Rauda from ADGM Academy just for a few more welcoming words. So Rauda, over to you.
Thank you, Sarah. Good afternoon, distinguished guests, colleagues, and partners. My name is Rauda Al-Dahiri, Head of R&D at ADGM Academy, and it's a pleasure to welcome you today on behalf of ADGM Academy to another important session in Season 2 of the Financing the Water Transition webinar series delivered in collaboration with GCFC. Today's discussion reflects a growing global reality, which is water security is no longer solely an environmental or infrastructure issue. It is an increasingly a strategic financial and economic priority. As pressure on global water systems intensifies, the ability to mobilize capital efficiently at scale and through credible market mechanisms will define how successful countries and institutions respond to this challenge. And from Abu Dhabi, one of the region's leading international financial centers, we recognize the critical role that financial markets, sustainable finance frameworks, and innovative capital structures must play in enabling long-term resilience. And through ADGM Academy and our wider ecosystem, we remain committed to advancing dialogue and capacity building around the future of sustainable and transition finance. Today's session focuses specifically on blue bonds and their growing role within the global sustainable finance landscape, where we are witnessing an increasing momentum around dedicated financing instruments that channel capital toward water-related infrastructure, resilience initiatives, and resource efficiency projects. This market is evolving rapidly, but scaling it successfully will require stronger pipelines of investable projects, robust governance frameworks, credible reporting standards, and greater confidence from both institutional and private sector investors. This conversation is especially timely as governments, development institutions, banks, and corporates prepare for the next phase of global water finance mobilization ahead of the United Nations Water Conference 2026. And importantly, this session today is not only about financing infrastructure, it is about strengthening the financial architecture required to support sustainable water systems at national, regional, and global scale. And at ADGM Academy, we believe Abu Dhabi is uniquely positioned to contribute to this agenda by convening policymakers, financial institutions, innovators, and industry leaders to shape practical investable solutions for the future. I would also like to remind the participants that those who attend all sessions within this series will receive an official certificate of attendance issued by ADGM Academy. And finally, I would like to extend my appreciation to our partners at the GCFC, our distinguished speakers, and all participants joining us today from across the finance, infrastructure, and sustainability ecosystem. We look forward to a highly insightful session. And with that, I will hand it over back to Sarah.
Thank you so much, Rauda. So we are ready to start, and Constance, the floor is yours.
Okay, thank you very much, Sarah. As Rauda rightly said it, water is not just a resource, it is an economic enabler, It's the enabler of community resilience, and increasingly today, it's the limiting factor of growth itself. The good thing is investors are increasingly realizing this. And just as an example, and the timing is quite unique, at BNP Paribas, we arranged successfully 2 inaugural blue bonds at benchmark size just this week. For a corporate in the US, 500 USD, a million USD, and for a development finance institution in Switzerland. Yet, water sits at a paradox. While it is today one of the most material risks in the next decade, it is the least financed theme in sustainable capital markets. So we see this gap not as a problem, but as an opportunity. Investing in sustainable use of oceans, in rivers, in freshwater systems, sits at the intersection of climate adaptation, economic resilience, and social stability. Few themes in sustainable capital market tick so many boxes at once. So that's why we're going to be discussing today. And to start with, Jennifer, at HSBC, you've been financing water infrastructure across the region for years. How has the financing evolved over the years?
Thank you, Constance, and thanks everyone for hosting us today. It's a pleasure to be here and talk about such an important topic. Maybe just to set the scene first and frame the conversation, as it was already mentioned, the Middle East and the MENAT region confronts one of the most severe water scarcity regions in the world. And this situation is exacerbated by a rapid growth in population, climate stress, and geopolitical complexities. The Middle East is actually home to 12 of the world's 17 most water-stressed countries in the world. So the ability to manage water resources is a critical determinant, as was already mentioned, to economic stability, food security, and social cohesion. And just another stat, just to set the scene, desalination in the region accounts for 60% of, or on average, essentially, of municipal water in parts of the Gulf. And it's one of the most energy-intensive industrial activities. So that's the backdrop and the context. And so to answer the question in terms of how have water projects evolved over the last few years in the GCC, well, they've shifted from being large-scale infrastructure projects to a broader water security, strategic, and sustainability programs. The water sector in MENAT, especially in the Gulf, has seen a lot of reforms in funding models. We've seen increased adoption of public-private partnerships, so PPPs, and notable water infrastructure projects have really come to life. And these changes have really helped and aim to address chronic water scarcity, improve efficiency, but also to attract private investment. That's from a structural funding perspective. From a sustainability perspective, many GCC countries relied in the past on thermal desalination technologies, projects like in the UAE, Fujairah F1 IWPP. They had a massive integrated power water facility that was mainly fueled by natural gas. And since 2015, the region has shifted towards more advanced technologies and more efficient technologies, such as reverse osmosis and lower energy desalination systems. One of the biggest changes also has been the move to solar-powered desalination, with projects like El Kharji Solar Desalination Plant in Saudi. Thematically, there's also a shift in broader thinking from not just water production, but water management. And we've seen ESG metrics that are being increasingly important in these projects. So it's no longer just about capacity, reliability, how much you produce, but also about carbon footprint, brine management, circular water usage, etc. Today, if we look at the pipeline in the region and we look at the water specifically, there are about 300 water treatment plants projects that are live, which accounts for roughly 20% of the financing need in the water sector in the region, and that's very promising. In addition, just to mention a few points, kind of looking at this wider context, from a sustainability perspective, water is also increasingly seen as social critical infrastructure. So it's not just about green or blue labels, it's also about the social aspect of it, because water that provides access to clean and reliable sources, especially the projects that are supporting social objectives, and have an overall sort of benefit from a social perspective, are looking to help, the wider population. And then lastly, a point, kind of a look forward point, because we talked about the trends of the past, but looking forward and looking ahead, we see additional pressure points on water, and that, to no surprise to probably anyone on this call, related to the AI-driven data center build out that we are expecting in the region. So given water scarcity in the region and learning from other regions, one hypothesis that we see potentially is operators in the GCC are likely to accept a higher PUE, so higher use of energy, to cool data centers, given the lower cost of energy in the region, rather than using water-based cooling that we see outside of this region. So that's just a bit on, hopefully, Constance gives a good picture of, the context, the trends, and the future of the theme of water.
That's absolutely perfect, Jennifer. Thank you very much. So maybe turning to Meisham, FAB issued the first blue bond by a financial institution in the region. What was the rationale? How did you go about this project?
Yeah. Thank you, Constance. Thank you, everyone, for joining this very important session. So just to provide some overview, thank you, Constance, for asking that question. For us, really, when we talk about blue assets or blue projects, they can also be considered as green projects as well. So the categorization, basically blue is a subset of green projects. And again, we could have chosen to go ahead and issue a green bond. However, we intentionally looked into a blue bond issuance. And that was mainly for the following. If I would summarize it maybe into three critical reasons why we thought it would be important to label it as a blue bond. One is, of course, we all know, the water infrastructure is one of the most, it's at the moment, water infrastructure adaptation, climate adaptation is one of the most underfinanced area, not just regionally, but also globally. Looking into UNEP's adaptation finance gap, it's around $300 billion a year. So that is just in gap. And when we talk about climate adaptation, a big portion of that is on water. So water treatment, water reuse, reducing our pressure on local water resources. So again, one is to bring that topic, to the stage and to show that such projects can be actually commercially viable for bond issuances and capital flow in the global market. That is one area. The second area is to basically support, of course, when we do these issuances, and we basically finance on the back of this bond issuance, we're financing and supporting projects that support the national and regional water strategy, be it in the UAE, the water security by 2036 objectives, which is to bring up and scale up more wastewater treatment plants, desalination plants, also powered by renewable energy, because here we're talking about a double two-sided environmental challenge, which is how do we provide more water, but also reduce our pressure on fossil fuels as well, because they're quite water intensive. Desalination is a very energy intensive activity. So again, how to push more desalination projects powered by renewable energy, as Jennifer mentioned. So again, supporting these projects are these are the types of projects that we have allocated to that blue bond. And again, that goes into supporting the UAE and the other regional countries that we finance in their own regional water strategies. The third part is the third aspect of it is to signal, market leadership in this area, and of course to tap into the blue bond market. And with that, of course, setting as the first financial institute in the GCC specifically to issue such a bond, I believe it did bring attention to the water finance, to the blue bond topic, and set a precedent for the other financial institutes to go out from the region or the GCC to go ahead and have, you know, the courage to go and issue such a blue bond, which comes with great responsibility, and I'm happy to share later on the steps that we have followed towards that issuance.
Thank you very much. And exactly before we get into the mechanics and the steps, maybe it's something you touched upon a little bit, which for me is a foundational question, which we get a lot of investors and issuers asking about. Is blue a shade of green? Is it a subset of social? Or is it something which is genuinely distinct? And I think this is an important one. Our view at BNP Paribas is quite clear. Blue can be its own discipline because it overlaps with green on climate mitigation, but it also overlaps with social on community resilience, and it overlaps with adaptation on coastal defense. But at the same time, it's governed by its own eligibility universe, its own science base, and increasingly its own investor community. So for us, like what you were saying, Mesam, because we've been either issuing or arranging about 15 blue bonds in the last 18 months, making blue as a standalone label, not a green with water, can really make a difference in accelerating channeling of capital towards economic social resilience. So with that in mind, Jennifer, when HSBC is guiding issuers, how do you help them navigate and choose between green, blue, social, adaptation even, or a combination of all?
Yeah, and maybe just to break it down first a little bit, Constance, for the audience. Yeah, absolutely, like we're all in agreement here as banks, right? So water is a broad theme, right? And it falls under several eligible categories when we think of sustainable finance and when we look at the credible taxonomies that exist, right? The most common thing people think about, and the first thing that comes to mind, is projects that fall under the theme of nature. So here we're looking at things that are related to sustainable water and waste management, or things that relate more to sustainable fishing and aquaculture, right? So that's the nature theme, and that's usually kind of the first one that comes to mind. That being said, as we've been discussing on the call, it can also fall under the theme of adaptation when we think of social systems like floods, measurements, and management in the future, right? So that's an adaptation theme of water as well. But water can also fall under, as we've been discussing, not just the green climate agenda, but also the transition climate agenda that's becoming more predominant, where we are looking at low carbon heating and cooling systems such as chilled water storage or paper making without water as well, right? So activities that are contributing to the green agenda or water technology that's also helping transition. And then finally, and as I mentioned earlier, and as we've been talking about, and this is a thematic that's often sometimes forgotten about because it doesn't apply everywhere in the world, but water can also be looked at as a social imperative, right? To provide access to an essential service to a particular targeted population. So it's a broad theme and it has several eligibility criterias. And that's why it merits this call. And that's why we're talking about it. It's so important. But ultimately, what is important to understand is what is the project or the framework that the issuer or the lender, or the borrower is trying to achieve? You know, what are you trying to solve for? And the most important fact that comes after that question is what evidence and what transparency and alignment do you have when it comes to a particular taxonomy, right? So those are the fundamental things that you need to look at. And then you can then decide where's the best home for it and how you want to categorize it. But you really need to know what you're trying to solve for, and you really need to have the right data and backing. And I think we're going to get into that a bit more to comply, right, with the characteristics that you need to prove.
Thank you, Jennifer. So I think it's a perfect condition for Mesam. Mesam, you told us what you were trying to solve for, but what were the hurdles and what did you actually gain in the process? in identifying those projects and being able to issue this blue bond?
I mean, one of the key hurdles, and I would say like more of the lessons learned, is again when we went out to the market and looking to issue this blue bond issuance. It did attract a certain type of investors, which we can call them the dark fund investors. They're more keen and they're more interested in such blue issuances. We've had, of course, previous experience on the green bond side of issuances, and of course, our toolkits, our due diligence measures are in place, and so on. We did. I mean, of course, it's a journey, it's a learning process across the years, but we continuously update our environmental social risk management, our housekeeping to make sure we keep track of all these projects and assets that we define. However, blue bonds, for some, for maybe for the nature of the topic itself, it does attract these dark green anchor investors. And with that in mind, we did have to go through some rigorous reviews and back and forth. And in some cases, we did feel that maybe we could have been more prepared, maybe we could have been more diligent in our ESG assessments and background checks on such projects and companies, have made sure, we collect certain data. Like, for example, they drilled down specifically, since some of them come from European markets, which is the alignment with the EU taxonomy and the do no significant harm, where they would drill down into topics on, like, for example, it's desalination running on powered by renewable. How do they manage their brine? And we go into the dispersion and how much goes into the ambient water quality. And we've drilled down into all these details, and we've gone through back and forth. So I would say the level of, do expect that when you deal with such a group of investors, I would strongly recommend to be very well prepared in terms of the environmental, social due diligence checks, the background, the collection of information. And with that in mind, that means that as a team, we need to be even more heavily involved working, since we're in Group ESG, we sit more on the, let's say, on the operational side of things, but to also work very closely with the business, the RMs who go out to the market, they discuss with the clients to make sure that these such topics and data is being collected at origination and during early discussions. And then the second part that I would say is also the reporting credibility. So even reporting wise, there was a lot of back and forth. When will you report? Will you include this in your annual sustainable finance impact, the allocation and use of proceeds reports? So just to make sure we have all the impact data in place. These areas I would also strongly recommend as part of lessons learned to have these in mind. And then the third part I would also mention is the third part is basically working also internally, building the capacity internally, because that was a great lesson learned for us to engage even more with the business and to engage even more with group funding and to make sure we're all aligned, we're all on the same page. So it did take a lot of work. Now we work together. Of course, we do that usually on issuances, but now we're even more proactively working together towards these items. So just take away these three key things.
Thank you, Maysam. And maybe to add to it, because we issued our own blue bond. So I would totally agree with you with the fact that blue investors go very deep in analyzing their investment, extremely detailed questions, and things that are extremely relevant for the GCC is the questions around energy intensity and CO2 emissions linked to desalination, acknowledging that two blue investors might have different views. So not only they're going to be questioning you quite a lot, but they might have different views on what is blue and what is not blue. However, on the positive side, there's a lot of things that can be done with AI nowadays. And at BNP Paribas, we've been able to leverage on Gen AI to accelerate the identification of eligible assets to be put in the Blue Bond program. And we went from shortening the Blue program issuance from 4 months to 6 weeks thanks to Gen AI. So it's something which can truly be leveraged nowadays, and it's extremely helpful. So maybe if we move, okay, We have the UN Water Conference coming to the region at the end of the year. It's a window of opportunity. There's going to be a lot of attention. And in the region, you have the assets and you have the credibility to be issuing blue. So the question for you, or to be investing in blue. So the question for every issuer, every investor in this audience is simple. What can you do? How can you send a signal? How can you leverage on this unique opportunity? And maybe to start with Mesam, maybe can you tell us about what is the issuer playbook? You want to issue blue. Can you testify and can you guide the audience on what to do?
No, absolutely. I mean, a lot of it is probably touched on by Jennifer and yourself, Constance, as well. Like, for example, looking into the guidelines out there, we have the main guideline, which is the IFC Blue Bond guideline, and it's just been recently updated again. Recently, 2025, not so recent maybe anymore. But these guidelines, of course, they provide. I believe you can consider it as the taxonomy on what typical investors would be accepting in terms of the blue assets that you would come to define and to allocate towards those bonds. Of course, the first step is always coming up, looking through across your books, your financial books, your projects, your companies, and so on. Which of those could fall within those eligible categories? Creating a repository of assets, and given that we just mentioned that it is, you're dealing with an investor that really appreciates and is keen to understand the full, due diligence from start to finish, whether the project has, received the environmental social impact clearances, whether from the local ministry, whether it's been independently reviewed as well. We've had also very similar questions on those. I would also strongly recommend, just from a practical sense, is to create even ESG assessments toolkits for such projects, making sure that these toolkits already collect and have all this data and information readily in place. And of course, it can be very much guided by the Blue Bond guidelines that are published by IFC. It is very, very well detailed and very descriptive on these aspects. And then, of course, once you've identified your assets, usually you would allocate, depending on how good the assets are, how well they are aligned with these categories. And back to Constance's point is that two different, let's say, dark green investors about to, invest in a blue bond may not have the same appetite or the same alignment on the categories, even though they are in the IFC blue bond guidelines. They may not fully agree on those. And what we had done as well, from a practical experience that we have found very useful, which is to send out a survey to all the potential investors and to get their insights on the different categories that we seek to include, whether we go for such an issuance or whether when we're going through updating our framework, these are the eligible categories that we're looking at when it comes to blue asset classification and so on. And we have been, getting very good insights, and we have been also guided by them. So this also helps just attract your right investors towards your eligible categories. And of course, investors do appreciate new projects. They do like to see at least a maximum of 36-month look back. But again, this can be disputed from one investor to another. Some are not really concerned, but also keep in mind that it's usually best to have a new pipeline project. So investors like to see new impacts that are created in the market. So that's something worth flagging. And of course, as I mentioned earlier, it's a multidisciplinary activity. So it's not one department that works on this, even though we keep we we keep a visible eye on the assets and we track them and we keep them in a repository and we manage the proceeds and so on. We do work very closely with the group funding to check, because they are in touch with the investors, to check for the market appetite, and of course whether they do have a market appetite to raise capital at a certain time, as well as the basically our business and coverage. Like, for example, is there anything coming towards us in the pipeline? So they are the ones in the market, they see the market interest as well. And usually these projects, when it comes to when we talk about wastewater, or as we talked about, desalination powered fully on renewable energy, because desalination running on fossils are not eligible for blue financing in this region as well. So it would be important to understand, because it takes quite some time to get those projects from the pipeline to become materialized into a project. So if you are about to issue a bond, it may take you, and you still have those projects in the pipeline, it may take you some time to start allocating the proceeds of the bond towards those. From our and of course what we do once we issued the bond, and of course it has been a good experience to attract and diversify our investors through this bond, which was not typically, the investors that we attracted are not the ones that typically come to our or invest towards our green bonds. We also, of course, ring fence these assets. We keep track of them, because we do get reports from investors on a continuous basis, maybe not, quarterly, but every 6 months. And of course, they expect annual reporting on how these are allocated, and making sure we add the metrics, as Constance mentioned. Like, for example, if it's running fully on desalination, running fully on renewable energy, we need to make sure that it's less than 100 grams of CO2 emissions per 1 kilowatt hour generated. So these are kind of thresholds that we need to keep track of, and to make sure that we also give the comfort to our investors that we're keeping track of, alongside, of course, the number of beneficiaries, because I remember that question was coming a lot when we had these talks with the investors, is we also want to understand, and back to Jennifer's point, is the number of beneficiaries benefiting from the wastewater treated, how many are those, or the water treated through the desalination? What's the number of beneficiaries? And again, it goes back to the impact. Investors are interested in understanding not just the environmental impact, which is the cubic meter of wastewater treated and reused in irrigation, or the number of, for example, cubic meter of water also treated for drinking purposes and so on. They're also interested in the social metrics as well. That's mostly it. I mean, I think if I could summarize, maybe just the key point I have is us going through a private placement, and again, I mean, it wasn't a very big amount of 50 million at the start, and then on the back of that, we've received even more investor interest, and then had a second issuance of 20 million US dollars. I mean, it would be a good experience for companies that are just about to go in the market and issue as a first-time issuance in a new theme area, that they want to get that let's say experience, knowledge, and understanding. And of course, you get a lot along the way while you engage with the investors and you work closely with all the different departments, is to potentially look into even private placements. I mean, you don't have to go for a benchmark size 500 million US dollars. You can initially start with a private placement, build up your capacity, build up your governance structure, because it does require a good governance and transparent structure in place by the entity itself, and then go ahead and then you would have greater confidence, and your investors will have greater confidence in your issuance.
That's a great advice. Thank you very much, Meysam. If we turn to investors, because there's many investors in the audience, Jennifer, can you guide them on what is investor playbook, what to look for, how to do it?
Sure, absolutely. And that's not just, I would say, if we think of the bonds and loans placed together, we can kind of group the investors and banks as well. So for other banks that are on the line, when you're looking at a syndication in the space and in the lending market, what are the things to look for? And Meysam already touched on a lot of this, right? But ultimately, we always go back to sustainable finance principles, right? So it's always important to look at that and look at, as Meysam clearly articulated, use of proceeds, project evaluation and selection, management of proceeds and the reporting. So Maysam already touched on each one of those, but it's important to have that kind of framework in mind as you set out and as you're evaluating. Alignment to taxonomies, as Maysam touched about already. And then on top of that, not just a specific taxonomy, but it could also be, something that's specified in framework, something that you've seen. So a credible source, right, where you can align your use of proceeds. On top of this, obviously looking at a second party opinion from a credible provider is always important. And that again goes for both an investor or lenders that are looking at these assets. Clear tagging of what are you putting the assets against, right? So which category, which part of the taxonomy are you looking at? Where is the eligibility criteria essentially? And that's really important. You also want to make sure that you're really engaging well, right? Ultimately, you have to, as always in finance and banking, engage early with your audience where you need to, whether that's, the internal stakeholders that you have or external stakeholders, right? To educate them on this topic. It's not something that, you see every day. Obviously, it's a growing theme, hopefully, but it's something that you need to, socialize, educate on. And really, kind of get the questions that like getting ahead of the questions essentially. Ultimately, what we look for here is also ensuring that you have harmonization of the reporting that you're going to expect, right, and the KPIs. And, look for any structures or mechanisms that will overall also enhance your overall offering, right? So it's not just about sustainability, but also thinking about the broader context in which the facility or the bond is under.
Thank you very much. So maybe in conclusion, we see a lot of potential today with Blue Finance. We see it extremely relevant in the region right now. There's 5 things you probably need to do. First is keep the eligibility crystal clear. Ensure that the assets are truly blue, that will prevent you from too much scrutiny from investors. You also need to align the label size with the pipeline depth. If you want to issue a pure blue label of USD 100 million, you need about 400 million worth of pipeline and projects. As both Maysam and Jennifer rightly said it, you absolutely need to invest early in targeted pre-marketing. You really need to engage with investors, identify potential anchor investor that would potentially be the one interested in private placement. Treat reporting as a growth engine, a collaborative mechanism internally. It's not a checkbox. Each impact report will bring you additional investors and will bring you diversification. And maybe one last thing, we can only encourage you to partner with seasoned Blue Finance architects. Blue is a small enough market that reputation travels fast in both directions. So we encourage you to get a greater testimonial from Maysam, work with seasoned banks like HSBC or BNP Paribas, who have structured across labels, jurisdiction, understand where the investors are and what they're interested into. But that said, we believe that the UN Water Conference is a once-in-a-decade catalyst where attention, capital, and strong political will bring a lot of momentum to Blue here in the region. We feel that every single investor in this room has a potential framework decision in front of them, and it's right now because it will take a couple of months to put it together. And every investor in this audience also has allocation decision to make. So we're here to guide you, but we believe it's a unique opportunity to grow this absolutely fantastic market, which is really realigning every single dimension of sustainable finance. So thank you very much. And I think we still have a couple of minutes for questions if you have any. Sarah, I think maybe You're the one with questions.
Yes, I was reviewing the chat so that I can support you. Here, one question on how do yields on blue bonds typically compare with those of green bonds?
I think you should expect to have something similar. Okay, I think each time we've seen issuers or investors looking for a differentiated prices, we end up having difficulties to place the bond. So that's what we've seen in the last year at least. I don't know, Jennifer or Meysam, if you want to add something.
Maybe did I understand the question correctly? Which is how are blue bonds different from green bonds? Is that or pricing?
In terms of pricing, yeah.
In terms of pricing, again, it's really I mean, we have not seen a greenium or a blue, I don't know, premium on such issuances. We have not seen much of a differentiation between both issuances. It really depends on the market price. It depends on how the group funding's appetite towards the pricing and so on. So there's no one I would say one box saying that just because you're issuing a blue bond you're getting a good price, but it really depends on the discussions between the investors and so on. However, we have seen some very, very small amount, and I'm not sure I can even mention it. It's a very, very small amount of a greenium on the blue bond, the publicly listed blue bonds that we have issued, mainly because there's been a lot of investor interest in those specifically, and they've been oversubscribed and so on. So I mean, that could be the main reason why it had resulted in a slightly reduced interest rate in comparison with the conventional bonds. But that's just the experience that I have come across. I'm not sure if Jennifer has a different experience.
No, I think, listen, across, whether you're talking bonds, loans, etc., across all instruments and sustainable finance in general, if you're looking at price differentiation, you're not thinking about this in the right way, right? So you have to go, the reason why you do a label and you get more granular and specific is more about, the broader strategic context that you're trying to achieve, the investors or the lenders that you're trying to attract, essentially an alignment to the strategy of what you're trying to do and the signaling to the market ultimately, right? So when we talk about sustainable finance in general, these are more attractive assets. They're assets that are also not necessarily attractive similarly to all types of either lenders or investors, but they are more specific in nature. And so again, you're not trying to solve here for pricing. Again, no matter the instrument that you're looking at, you're trying to solve for strategic alignment, you're trying to solve for signaling in the market, and you're trying to solve it for having the right lenders or investors in your funding pool.
And maybe one last thing, so it's not a pricing benefit. However, there is a real diversification of investor benefit. There's a high likelihood that a blue bond will get you new investors and dark green patient capital type of investors. And that's a real benefit as an issuer.
Yeah.
Thank you all, very, very insightful. And maybe just a last one from Zohir, Director Global Policy at Brunswick Group London. How important is it to have global regulatory framework that standardizes blue bond criteria, making, for example, the IFC or ICMA frameworks mandatory?
I think there's already quite a lot of guidance, and I think everyone in the market understands the risk of greenwashing or blue washing. So I don't think we need more guidance or more framework. I think the ICMA is probably doing this very well. I think there's also market regulation, but I will let Meysam or Jennifer add to this.
No, absolutely, I agree with you, Constance. It is definitely it feels like it's regulated by the market because investors are and lenders who invest in those bonds are very keen to understand how these different principles are being applied by the organization. I believe there's a lot of scrutiny done by them when they come to these issuances. There's a lot of engagement on the reporting requirements, and even annually when we publish our sustainable finance impact report. And just want to say, watch the space, because hopefully, inshallah, we are about to issue our report today. So keep an eye on our sustainable finance impact report, which you will find our blue bond already being mentioned there with the impact metrics. So yes, I do believe, again, back to your point, Constance, definitely agree with you. I don't feel we need more regulation. I feel we already have enough on our plates driven by the market.
Jennifer?
Yeah, nothing more to add. I think, as was said, these are markets that are matured, right? It's not like something new. I think everybody's learned from lessons in the past as well. And I think, again, it's more about the implementation and the execution that needs to be done properly, following the guidance. Some of it we've shared on this call, right? Rather than needing even more guidance that should be out there. It's more about following what we have and being precise about it and proper execution within already the resources that exist.
Thank you.
Thank you. Thank you all for a very insightful discussion, and many thanks again to our speakers for sharing their perspectives and expertise today. So today's conversation highlighted not only the growing importance of water finance, but also the complexity of scaling investment into water infrastructure, from structuring considerations and sustainable finance frameworks to project bankability and broader market readiness. So as a reminder, this webinar series will continue over the coming months. Episode 3 will happen mid of June, where we will move further into implementation-focused discussion, including country-level approaches and water compacts. Please also note that the recording of today's session will be uploaded on the GCFC YouTube channel, where you can also find all the previous one. And I will share the link here with you in the chat, just to be more efficient. And finally, as with last year's series, participants attending the full webinar series will receive a certificate of participation from ADGM Academy. So thank you again for joining us today. A special thanks to all our speakers and the ADGM Academy to be an amazing partner on this. And we look forward to seeing many of you in the upcoming sessions.
Thank you
all.
very much.
Thank you all. Thank you so much
Bye.
for the invite. Bye-bye. Thank you.
Bye.
Bye.
Thank you.